Relative Strength Index, the RSI, measures price momentum. When conditions are bullish, look to buy when the indicator is oversold. Understand the RSI deeply by learning how to calculate it. Use an if statement to identify if the close is higher than the previous close, and if so, include the absolute difference between the closes. Use another one to identify if the close is lower, and again include the absolute difference. Now, use the formula equals average to use a simple moving average for the first row. Then calculate the Wells-Wilder average, which is the current plus the previous average multiplied by 11, all divided by 12. Now you are ready to calculate the relative strength, which is the up-day average divided by the down-day average. Convert this into the RSI with the formula 100 minus brackets 100 divided by 1 plus the relative strength.